changed there. No new splash from the governor. Although, hold that thought, we do have a statement from the Bank of England. Actually, I take that back. We don't. Philip?
Yeah, absolutely no surprise on the decision itself here. We reckoned that Mark Carney really wants to get his feet under the table. He's only been in the job for around 4 days now before making I guess a more in-depth call on whether he's going to back quantitative easing or more QE or not. Yes, there's a little bit of talk about perhaps there would be a statement during the first meeting, but that doesn't seem to be the case. And really, the focus now is going to be on the August meeting, which for several reasons looks to be a pretty significant one.
Actually, Philip, there are a couple of headlines coming out now on inflation. CPI set to rise further in the near term before falling back to target further out. And incoming data over the past couple of months has been broadly consistent with May GDP and CPI forecasts. So they have issued a statement, and this is something of a rarity. Well,
certainly hitherto, the practice was on a no change not to provide a statement. I think, perhaps on up to half a dozen occasions, the MPC has felt that it has needed to give a message out to markets, even though it hasn't adjusted policy. And I think what we seem to be witnessing now is that the new governor wants more transparency, more openness to communicate exactly what the MPC is thinking, and perhaps an earlier guide to the decision-making process than the minutes, which will come out in just under 2 weeks' time.
Well, of course, this is Mark Carney's first MPC meeting as governor. He's not made a splash on the policy front, but in terms of communication, he's certainly had an influence, because he's issued a statement. The bank has issued a statement, and they've also said that the sharp rise we've seen up in yields lately might weigh on their economic outlook. So a bit of a warning there.
Yeah, very much so. I mean, one of the positive features of the recovery situation, perhaps over the past 2 or 3 months, has been the housing market, and one ingredient there has been that fixed rate mortgages have come down to all-time low rates. So if you get gilt yields and swap rates backing back up again, then that potentially endangers the housing market. So it is a bit of a warning there that there are a few factors in play which the MPC is watching.
We've had quite a sharp reaction in the markets. Cable down from about 152.5 down towards around 151.5, so a full cent off cable. The bank also saying that forward guidance will feature heavily in the August policy statement. So pretty dovish slant there, perhaps.
Well, the statement does seem reasonably dovish. We'll have to obviously wait for the official guidance next month to see whether it's dovish or hawkish, but certainly we're in for a few treats, I think, as far as the August meeting is concerned, with changes in procedures, and really it's a revamp of the way that the Bank of England is operating monetary policy.